Hi friends, Government of India has introduced a new tax structure. Now you have an option to choose between the old one and the new one. This is the old tax slab and this is the new tax slab. I'm going to explain you an example of difference between the old income tax and new tax for an individual salaried employee whose income is 7.5 lakhs per annum. I'm taking an example of income of a salaried person as 7.5 lakhs per annum. I'm only taking three categories. Those are basic, HRA, and other allowances. Basic is 45% of the CTC, HRA is 40% of the basic, and other allowances. This will remain same in old and new. If I come to tax calculation part, from 0 to 2.5 lakhs, it is 0. From 2.5 lakhs to 5 lakhs, it is 5%. In 5 lakhs to 10 lakhs, it is 20%. This is under old scheme. If I come to new scheme, it is 0 to 2.5 lakhs, it is nil. 2.5 lakhs to 5 lakhs, it is 5%. 5 lakhs to 7.5 lakhs, it is 10%. Now the difference here you can find it is 10 lakhs and 7.5 lakhs. If I do the tax calculations under old scheme, it is coming up to 62,500 rupees. If I do the tax calculation under new scheme, it is 37,500. Now you can find the difference between the old and new. You have tax savings of rupees 25,000. Now friends, since I have taken example of a person who doesn't have any savings under chapter 6A, that is in 80C like tuition fees, principal of housing loan payment, provident fund, Sukanya Samriddhi, and the list goes on. This is only to those people who doesn't have savings. If this scenario will change if you have savings. I'm going to explain you in the next slide. If I take an example of savings under chapter 6A, considering the salary as 7.5 lakhs per annum under old and new scheme. Under old scheme, you will get standard deduction as 50,000 rupees, HRA exemption as 96,000. I have taken example of 96,000 considering 8,000 rupees as per month rent. ATC, tuition fees, life insurance policy, provident fund, public provident fund, and the list goes on. All these together, you have only a limit of 1.5 lakhs as a bracket. Even if you pay all together as 2 lakhs rupees, you only get 1.5 lakhs as an exemption. ATD, medical insurance policy. This is for self, spouse, and children. It is up to 25,000. If I remove all these savings from the 7.5 lakhs package, the income is 4,29,000, the taxable income. Under old scheme, there is a rebate under section 87A if your income is less than 5 lakh rupees. So under old scheme, you end up pay tax nothing, it's nil. But in terms of new scheme, you don't get any kind of savings. If you take an example of standard deduction, you doesn't get. You take an example of HRA, you doesn't get. If you take an example of ATC, you doesn't get. If you take an example of medical insurance, you doesn't get. The new tax system is very simple. 7.5 lakhs per annum. Simply calculate the amount of tax, that is 37,500. Now the difference you can find in the new scheme, you end up paying taxes, but in terms of old scheme, you save everything. Considering the example, you can now choose between the old system and new system, whichever is beneficial to you. For your convenience, I have created an Excel sheet where you can do your own comparison between the old and new. You can download from the below link. For any queries, you can reach me to below mentioned email ID. Thank you for watching. Stay home, stay safe.